We also have Mayur Milak of IndiaNivesh joining us on the phone line. Mayur, thank you so much for speaking to Bloomberg Quint. I was just having a look at the realizations, and the calculations show that the realizations per unit are up 8.5%, and this is despite the fact that the margin or the material costs are higher by about 4% as a percent of total sales. Given the fact that material costs have not come down for auto companies, but realizations have gone up, what is your assessment of the entire situation? Do you think the discounting in the marketplace was much lower than the anticipation, and the realizations have been much better given the fact that most of the companies had done a price hike?
Here, honestly, I don't think I'd want to read it that way.
Okay.
Frankly, I think realizations are also up because Maruti has introduced BS on most of its vehicles now. So, getting that 3.5%, 4% higher was any which way is a very typical thing to do. So I think getting overall, if you look at really a YOY thing, yes, it looks at 8%, but I think we were anticipating between 490 and 493. They reported at 5,02,000. Wouldn't really say that discounts, have really gone low. I'm sure in the con call, the management will probably give a flavor of where it was, but I'd want to believe that this is more to do with the higher pricing action.
And Mayur, in the results presentation, Maruti has mentioned that moving ahead, the adverse forex movement will also impact their margins. This time also, apart from the foreign exchange moves on the adverse side, the ad costs were lower. Of course, second half, most of the analysts are expecting that volumes will pick up. But in terms of margin trajectory, do you think 9.5%, 10% kind of operating margin level is a bottom for Maruti, and from here on things would look up on the operating front?
So frankly, we are building in about 10.5, 11 kind of number.
Okay.
Just like you don't believe that, they could do worse than probably a 9, 9.5. I also in the near term don't believe that they can go back to that 14 mark. Our sense is, that competition is very aggressive. And somehow our interaction with, more on the Nexa dealers are that they are really the guys who are struggling hard. So unless your premium products don't really do great, very difficult to really believe that margins can expand significantly. I think one good advantage will be that steel prices are low, and hopefully with higher volumes you will be able to do better operating leverage. But having said that, I still believe that it is very difficult right now to believe that they can 14% mark in the near term.
Okay. Ashwin, what is the view on the margins, given the fact that there have been a lot of headwinds in the recent time, including forex and higher discounting? Do you see margins could look up from the current levels?
Yeah, as I have already said that, 9 and 9.5% kind of margins. I think they are the bottomed out margins for Maruti. And as volumes improve, as I said, that monsoon will be helping them because Maruti being one of a strong player in the rural markets and, expected good Rabi crop would be helping them to get a good volumes from the rural markets, and that would be helping them to gain somewhat operating leverage, and that would be helping them to improve their margins in second half as well as in FY21, though not up to the levels of 14-15%, but at least 10 to 11% margins can be would be reasonable for the stock.
Okay, gentlemen, we leave it at that. Thank you so much, Mayur Milak and Ashwin Patil, for taking out the time and analyzing and decoding the Maruti quarterly earnings. So that's a word coming in from the analyst community. They do expect the margins to bottom out from the current levels. Of course, the management commentary in the conference call is still awaited, and post which the ratings and the earnings would be something that would be reviewed by the analyst at this point in time. So that's what we have so far on Maruti Suzuki. Stay tuned to BloombergQuint.com for more business news updates.